So I know that we're eating into everybody's Labor Day. So first of all, it's my pleasure to give you this warm welcome this Labor Day to the third African Sovereign Wealth and Pension Fund Leaders Forum COVID-19 Roundtable. My name is Hubert Danso. I'm the CEO and Chairman of Africa Investor and the Chairman of this Sovereign Wealth and Pension Fund Leaders Forum. And I'll be co-chairing this session today. As always, I'd like to start by thanking each of you for making the time, particularly on a holiday, to participate in this consultative process. Is to pursue ESG compliant infrastructure co-investment partnerships with a particular focus on the energy, healthcare and agribusiness sectors. The third recommendation was really to look at how we can develop and communicate seminal pandemic-oriented responses and investment models and strategies. I know my co-chair Uche Orji has a lot to say, a lot of great ideas on that particular recommendation. And then we have recommendation number 4, which is to champion institutional investor research insights to provide some seminal insights for the industry as it relates to the continent. And of course, I think we all operate against some very similar governance standards, so hopefully that will have a global impact. And that's driven by Dr. Mbui Wagacha, who's here with us today, who will also be talking about that. Recommendation number 5 was to motivate, which came from my good colleague in Egypt, who will be joining us, Ayman Soleiman, which is to motivate governments to consider directing some of the quantitative easing or emergency funding towards sovereign wealth funds to allocate and invest in the local economies on the understanding that we have the expertise, and that's an important role that we could play in that regard. Recommendation number 6 is to engage in policy partnerships with central bank governors. That's something that Duncan Bonfield from the International Federation of Sovereign Wealth Funds is championing, and he will talk again a little bit more about that. And that's really just working more with central bank governors on framing the new regulatory environment and investment needs of the post-COVID economy. Finally, as we know, it's going to be very important for us to engage not only across the continent but globally. So the recommendation number 7 was really focused on coordinating and correlating our responses to this pandemic with global peer institutional investor and private sector industry bodies. As I mentioned before, infrastructure, co-investing and ESG really rose to the top as a big front runner, the critical area for us to have a much bigger and more dynamic impact, to build that resilient infrastructure under the framework of the African Union Continental Business Network's 5% agenda, which was endorsed by the African Union at the Heads of State Summit in Mauritania, which essentially is where us as the asset owner community undertake to increase our allocations to at least 5% of assets under management to infrastructure in Africa through a new institutional investor public partnership framework, where we are able to hopefully create a lot more alignment with the governments that are actually driving a number of the transactions, which is a variation of the existing public-private partnership, but lends itself much more to the investment criteria and approaches that many of us take as long-term equity investors in particular. So we have a great lineup of discussion leaders and guests today, and I know that we're limited on time, but it's my pleasure to welcome Hiro Mizuno, who I think everyone knows from his days as Executive Managing Director and Chief Investment Officer of Japan's 1.6 trillion government pensions investment fund. We have His Excellency Raila Odinga, the former Prime Minister of Kenya and now the High Representative for Infrastructure Development, the African Union. We have Uche Orji, the Chief Executive Officer of the Nigerian Sovereign Investment Authority, who is our co-chair. We have Solomon who is the CEO of the Ghana Infrastructure Investment Fund. We have Sandeep Rachuria, who is the chairman of the Kenya Pension Infrastructure Consortium. We have Ayman Solomon, who is the chief executive officer of the Sovereign Fund of Egypt. We have Nick Thursley, who is the director general of the World Pensions Council. We have Duncan Bonfield, the chief executive of the International Forum of Sovereign Wealth Funds. And we also have John Denton, who we mentioned is the first Australian Secretary General to preside in Paris as the Secretary General of the International Chamber of Commerce. And last but by no means least, we have Dr. Mbui Wagacha, who is the former acting chair of the board of the Central Bank of Kenya and the former chair of the Kenyan Sovereign Wealth Fund. So just to sort of restate by way of a bit of housekeeping, I'd be most grateful if you would keep your microphones on mute. And by way of the format, we will go through each of our speakers, and at the end of everyone's intervention, then we will open it up for any discussions and questions and answers. Those of you who are with us at our last roundtable, we wanted to try to make it very practical. We put out ideas, and then we really want to put forward some kind of concrete representation of a response to that idea that we could utilize as an industry. So last week we presented on how can we help SMEs and how can we employ digitization and digital trade, and we presented the Africa PLC platform as a sort of get us going type intro. Last roundtable, as I mentioned, highlighted infrastructure. One of the issues that came up is that it's very important under the 5% agenda that we look at co-investing more with each other. And we identified that one of the key starting points was that we share more information, share more transactions, and we make it easier for not only ourselves, but also our strategic and international potential co-investment partners to get access to that information. So we have responded to that, and we just have a very quick demonstration of what that looks like in our context. So if Mariana is on the line, are you there, Mariana?
Do you hear me?
Yes. Hi, Mariana. Do I need to share the screen with you?
No, I can share my screen.
Okay, great. So if you could please just take us through our response in terms of what we regard as Africa's first infrastructure co-investment platform for asset owners. And as you know, we are a constituency of asset owners. So if you could just show them where we are. And this is a live platform, and this will show you how we can all collaborate more, picking up on the ideas that you fed us through this particular process. Over to you, Mariana.
Thank you. So I will show you a quick walkthrough through the platform. Over here, we have, first of all, the first thing is you need to register to the platform. There is a short KYC process that you need to undergo. After your approval, you will see all the platform will be available for you. First of all, you have the dashboard page. On the dashboard page, you can see information about your projects and other projects currently available. On the company's page, you can see different projects that are available in this platform. You can click on that and see additional information. You can also download the documents and any documents that are the company, the project provided. You can see it over here and download it. One of the features is that you can invest in those projects. So first of all, on the fundraising, you can find the active campaigns. You can see all the information over here. First thing, you need to, after your, you need to get whitelisted. You click the whitelist request. Let me quickly just approve that.
So essentially, this is a platform where each of you and each of us that are looking for co-investors can post projects, all the necessary related information, and then we can come in and look at a project by country, by sector, by asset type, by region, and get all the necessary information. And as Mariana was saying, if you want to go as far as even consummating the transaction and investing, this is a blockchain-driven platform. It has immutable records, and you actually, if you want to invest directly on it, you have that opportunity to do so as well.
Yes. Also over here, you will be able to see your holdings, the companies that you're invested in. Let us just wait 1 second and let it to process. The whitelisting takes a minute or two to process. Meanwhile, you can see the current projects that we have over here.
So essentially, there are about 40 transactions that a number of you have shared with us, ranging from toll roads, airports, port-related projects, some agribusiness and healthcare-related assets. I think there's over $4 or so billion worth of assets on the platform at the moment, and then there will be opportunities for other projects to be onboarded. So we can support you with that as well. This will give you a window into what's happening in the rest of the continent as it relates to available infrastructure assets.
Yes.
I think in the interest of time, we might want to move on.
Okay. Over here, you can invest into a project. You just click the invest button. Of course, you have here the status of the fundraising. You have the information. You can choose the amount you want to invest. Send in the request invest. And once the process is over, you will receive your rights through the platform over here. You will see it as part of your holdings over here. So this is the main process.
Fantastic. Thank you very much, Mariana. That's very helpful. But I think the key message, maybe you would unshare the screen. I think the key message here is that we raised this big issue about needing to be able to centralize data that we can then use for co-investment purposes and understand what each other's doing on the continent. And we now have a platform of this nature. So we look forward to not only working with each of you, but also project developers, as well as governments, the African Union's PEDA projects, and a number of others can be made easily accessible of the relevant supporting information there.
Hubert, can I ask a quick question? So, I mean, it's a fabulous platform. I've seen similar platforms. For example, the G20 Hub has a platform. APEC has a platform. The interesting thing I don't understand with this one is this actually populated only by people contributing, or are you scraping where to try and determine where projects are to ensure there's a complete I suppose, list of all projects available in the continent?
Thank you, John. We are focused on our forum at the moment. And as part of our responsibility under the 5% agenda, that is really to drive co-investments between African asset owners and international asset owners as co-investors that have an interest in Africa. So initially, we are only focused on projects that are originated from our asset owner colleagues, directly from pension funds investing in Africa in those projects, or sovereign funds, or portfolio funds that have been introduced by either an African pension fund or a sovereign fund. Because we really want to ensure that every country and every fund is going to be participating in one form or another, or can verify that particular transaction. Okay. So I'm going to move now to Hero. As I mentioned, who needs no introduction, because key things around what we do infrastructure on the continent is driven largely by the extent to which ESG can be a factor, and how we can build that particular vision into how we invest to be able to access global pools, the multi-trillion-dollar pools, to complement our pools, and particularly under the 5% agenda, we know that can also catalyze some very substantial global institutional participation. So I'm going to give the floor to you now, Hero, and we're very grateful that you're here at what is probably nearing 11 p.m. At night your time. So over to you.
Yeah, thank you everybody. It's nice to meet you. Africa has been sort of area of my interest for opportunities, as well as the risk mitigation, as the we just need to make sure that the we will have the global economic growth, leaving nobody behind. So I was actively participating in a discussion with the World Bank when the Jim Kim was a president, and also we extended GPIF's the bond purchase program. I mean, green bond, the social bond purchase program to African Development Bank, and we are the one of the first institutional investors who underwrote, who have underwritten African Development Bank of the social bond issuance of to fight COVID-19. So there are several ways that when I was at GPIF, we try to route some of our capital into your continent. And GPIF spent a considerable time trying to find out the managers we can actually manage our money to put our money into African infrastructure, which kind of satisfy us with the sort of ESG quality. When I left, 4 weeks ago, we haven't been able to really choose the one focus on those opportunities. So we gave a mandate to fund of funds, infrastructure fund of funds guys, and we highlighted that we have a strong interest in investing into Africa. So it's been in the center of my sort of interest, and I tried several ways to deal with. So I think the some of the infrastructure fund managers, which has the global franchise, they are kind of showing interest to get the institutional money into African infrastructure, but including the one founded by Jim Kim himself, but we haven't really seen remarkably successful fundraising. So we just need to keep pushing it, and probably the partnership between those global franchise and people on this goal probably make the investment more feasible for a global big asset owner. The other things I've been doing, which maybe are just a bit off today's topic, is that I'm working with the United Nations to make sure that in my new capacity, I'm advising Japanese government on the green and sustainable finance. So I also work very closely with the United Nations to make sure that the sovereigns in Africa and in other developing countries can survive this COVID-19 pandemic, because we expect to see a lot of the technical default of sovereign bonds. So I try to support the UN to come up with some of the proposal to make sure that those people, those sovereign can survive through this pandemic. The other things I have been working on is I have been trying to advocate among the global asset owners who particularly the strong believer of the ESG investments. Now a lot of the listed companies are doing things which they usually don't do to help their society, and some of those money and their effort is trying to save the developing countries as well. And those kind of the effort negatively hit their bottom line negatively in the short term. So I think it's very critical for the ESG investor to support those companies who when they do those kind of things, which hit their bottom line negatively very in the short term, but they are actually supporting the stability, sort of sustainability of this global economy. So that's one of the topic I'm working with the UN, and I also remain on the board of PRI. So PRI working together, and then also through my asset owner network, we are trying to make sure that to appreciate the corporate executives' extraordinary effort to save his or her own society, as well as their impact on developing countries. And but last not the least, yesterday, Japanese Finance Minister Aso proposed at the G7 finance track meeting. G7 should put up the fund to buy out or invest into the patent for treatments as well as vaccine for the COVID-19, and so that the people in the developing country could have access to those the treatments as well as the vaccine at the same time as developed countries, people in the developed countries. So I'm actually advising him to create that kind of scheme. So several ways I'm involved in initiative to make sure that we will continue to have a inclusive growth, and ESG will remain my big theme. And over the last 3 days, I'm become the more famous because of the serving on the Tesla's board. But we also need to just the push to economic development in Africa too. So that's also why trying forward and encourage people in the continent actually just trying to team up to push this agenda. And if I can be for you. Thank
you very much, Hiro. Remind me of the old you probably work harder in retirement than you did in a full-time job. You seem to be you seem to be doing a lot of great stuff as usual. And we certainly will continue to take you up and engage you, particularly, we are working as a collective. The 5% agenda that's been mandated to us through the African Union heads of state has been very explicit and clear that as asset owners on the continent, we must find more, creative ways to be able to co-invest together and de-risk, so that we can not only, increase the intra-African investment levels, but also, get better access to the global multi-trillion pools of capital. So we will certainly be on the co-investment side reaching out to you to work with us as we reach into some of the international markets and of course, work with you on some of the other ideas that you have. And finally, I think we will also be able to respond in terms of helping GIPF as they look for African managers. There are a number of good African managers that are working in one form with a number of us on this call. So we'd be happy to facilitate that particular process as well. I think one of the other things you didn't mention that you were involved in and very supportive that was hosted in Kenya at one point is the TICAD process, the Tokyo International Conference on African Development. So with that said, I'm very glad to now call on His Excellency and our dear friend and leader, His Excellency Raila Odinga, the former Prime Minister of Kenya and the current High Representative for Infrastructure Development at the African Union Commission to share his remarks. Over to you, sir.
I'm happy to talk to you from Nairobi, Kenya. And I've been waiting. In fact, I was not mentioned earlier on and I was wondering what was happening. But yes, the African Union is, as you know, very concerned about the corona pandemic, which has hit the continent and the entire international community. So I'm very happy to join this conversation with people from the continent and also from outside the continent, sharing views about how to assist or to chip in the gigantic efforts of getting Africa to work post-corona. I recently wrote an article which appeared last week in the media here about Africa post-corona. And what you're saying is that it's a crisis, just like the world has experienced crisis before. And any crisis, just like a cloud, also offers an opportunity. And I believe that this crisis offers a tremendous opportunity for Africa to move on the next stage. But Africa will not do it for itself because this is like a third world war minus bombs. If you look at the level of the casualties that we are seeing around the world, it is bigger than the world war. The United States is losing about 2,000 people every day. So we are saying that Africa need to respond. And I'm happy that those who are managing financial resources in the continent are thinking likewise. I am the High Representative of the African Union on infrastructure development. Here we've been talking about connecting the continent so that the African Free Trade Agreement, which was signed and has come into effect, can be realized. They're saying that it has been affected by the COVID, but I think that the COVID has given it more impetus to move forward. Here we are talking in terms of connectivity so that the goods can flow from one country to country across the continent. Here we're talking about the infrastructure like railway network, the Trans-African Railway Network, Trans-African highways, the fiber optic connectivity, the pipelines, that is the gas pipelines across the continent, the open airspace and open skies for the continent to make it easier to move, and finally energy, which, as you know, is the nerve of the African economy. So we would like to see that those who are involved should basically come to us with what we are talking about, 5% EU 5% investment in infrastructure. Those who are managing financial resources across the continent should devote at least 5% as an investment in the African infrastructure. Because as you know, Africa is at the moment capital deficient. And going to the other countries or the rest of the world, which is also devastated by corona, is not going to work. So we have to work with the resources that we have here. And we have resources in the continent. And we also have opportunities to invest those resources in areas which will also yield returns. There will be very comfortable returns in this respect. So here we are dealing now specifically with energy. And here I want to address the issue of Inga Dam in the Democratic Republic of Congo, which we are discussing right now. The President of DRC, His Excellency President Felix Tshisekedi. We are talking in terms of developing the great potential that we have, clean energy, that can help to power the African economies. And here, Inga, as you know, cannot be developed by the DRC as a national project because the Inga potential far exceeds the domestic demand of the DRC. It is, and that's why it needs to be developed as a regional and a continental project. Several African countries are energy deficient, are willing to sign in to be able to uptake from power that is going to be generated at the Inga. We intend to host a conference in Kinshasa, Corona allowing, within the next 1 or 2 or 3 months. Initially, we had planned to do it in this month of April. It has been now scheduled for next month. We may hold it, or we may have to postpone it, or we may find ways of using technology to hold that conference. So here, we would like to now work with the team of the funders, fund managers on the continent. We want to invite them to come to attend this conference, work with us, so that we can be able to raise funds, think together how the Inga can be developed as a regional and a continental project. His Excellency, President Cyril Ramaphosa of South Africa, who is the current president of the AU heads of states or summits, is going to be hosting this conference and is trying to mobilize the African heads of states to also attend this conference. So we would like to, in conclusion, to invite the heads of the institutions that are participating in this discussion to come and attend this conference so that we can think together and find a way of developing a project which, in our view, will help Africa to move from energy deficiency to self-sufficiency so that we can be able to power Africa's industries. As you know, Africa is the richest continent in terms of raw materials, but most of Africa's raw materials are leaving the continent as raw. We want to do value addition to these raw materials, like the iron ore, the bauxite, the copper ore, the gold, and so on, so that we can be able to create also employment for the African youth. But I thank you for this attention, and we hope that we can have an opportunity in future to meet with you people. Thank you very much.
Thank you very much, Excellency. You always continue to inspire us as a community of asset owners, and in particular your support for the 5% agenda, and working with us as a distinct community is very well appreciated. I think you touched on the most important point, is that we're a continent of opportunity, but I think the leadership that you represent in being able to understand why the frameworks have not, some of the PPP frameworks in the past have not lent themselves to be able to unlock as much institutional capital as possible, and being able to work with us through the 5% agenda under a new institutional investor public partnership framework that recognizes the investment policy criteria and mandates, and exercises some flexibility so that we can meet each other as asset owners and public owners of infrastructure, so that we can deploy longer term capital to the projects. And I think working together with you in my capacity as the chairman of the Continental Business Network, and your role as the High Representative for Infrastructure, I think we have a very good opportunity to be able to mobilize probably more than the 5%. And I'm hoping that we'll be able to come back sometime in the future, because that's the response that we receive from colleagues, which is, yes, a 5% agenda is interesting, but we would actually like to be able to do more. And if we can create that hospitable environment by addressing some of the regulatory issues around pension funds, for example, being able to invest in what's perceived to be an illiquid asset, or invest across border, and some of those issues, or the capital markets more. I think there are exciting times for us ahead, in spite of the challenging times that we live in now. So we're most grateful for your time, Your Excellency, and we look forward to continuing to work with you on this important agenda through the 5% agenda framework. I don't know if anyone has a question that they'd like to put to His Excellency.
None.
Okay, you evidently addressed it so eloquently as usual, that we're all very confident. But Your Excellency, I'd like you to listen to just to remain with us and just listen to a few colleagues from sovereign funds and pension fund consortiums who'd like to just share with you some of their projects that they're working on. So if I can now call on Uche, who is the Chief Executive Officer from the Nigerian Sovereign Investment Authority. Then I'm going to call on Solomon Asamoah from the Ghana Infrastructure Investment Fund, who you know, and then Sandeep Rachuria, who is head of the Kenyan Pension Fund Consortium. Over to you, Uche.
Excellency, thank you very much. I was very intrigued by the comments you made about the Inga Dam project and how you're going to make it a regional project. Obviously, some of these things, the challenges with regional projects is obviously getting everyone to come together. And I say that only because there are a number of hydro dam projects that I see that are in planning. And they are also, because of the water rights issue, can also cause friction with the neighboring countries. In addressing this and making it a regional project, can you speak to how you manage to, or what you are doing to address the various needs of the various countries involved, and how you're pulling together such a conversation to make sure that it works for everyone involved? Without question, this checks a sustainability box for a lot of people in terms of the fact that we can reuse the water resources, but at the same time, to avoid all the unintended consequences, just getting the governance together and getting everyone to work together. I'm quite keen to see how that is being addressed.
Yes, Thank you very much for that question. The issue is not why, but the issue is how. I think that's very interesting. First, we all agree that all the countries in Africa are energy deficient. The cost of energy in Africa is actually scaring investors away from the continent. If you take a country like the Gambia, the cost of energy is like 34 cents per unit. That will scare anybody away to come in. It's too expensive. In most of African countries, it is in the double digits in terms of US cents per unit. Now, the demand is very high. So you find in the Southern African region, you have deficiencies. South Africa used to be self-sufficient, but now, because of the expansion of manufacturing in that country, their demand far exceeds the capacity. So, but the good thing is that we have in Africa regional power pools. We've got the Southern African power pool, West Africa, Northern Africa.
I think we've lost sound.
First is to connectivity between the various power pools on the continent. Then you can then be able to supply it continentally. First, we need to deal with the issue of generation. But simultaneously, we also address the issue of supply.
Excellency, if I can interrupt. Yeah, sorry, I think you're. Oh, there. Okay.
Sorry, you can hear me now?
Yes, we can.
What I'm saying is that we have the issue of connectivity. At the moment, as I mentioned, South Africa is ready to sign to import 5,000 megawatts from Inga. Namibia is ready. Angola is ready. Zambia and Tanzania is ready. Now, then, out of Tanzania, those other countries are in the Southern African power pool. Then you've got the East African power pool, which brings together Kenya, Uganda, Tanzania. Now it's connecting Rwanda, Burundi. Now Kenya is already connected to Ethiopia. It's also now connected to Sudan to Egypt. So you're going to have this connectivity across the continent. If the Eastern Africa, you connect Tanzania to Zambia, you already connected the East African power pool, the Southern African power pool. That way now you have the connectivity. So from the DRC, you connect to the Southern African power pool, which will then in turn to connect the Eastern African power pool, then through Ethiopia to the Northern Africa. The DRC also to connect to Congo, the Republic of Congo, to Central African power pool, and then to Nigeria, and then you're ready into West African power pool. So connectivity is an issue, it's a challenge, but it is not an insurmountable challenge. It's something that is actually achievable across the continent. Therefore, we address that. We also address the issue of generation. The Inga initially was estimated to have a capacity of 42,000 megawatts. Now the latest study shows that it goes up to 110,000 megawatts, far much in excess of the demand of DRC the next 50 to 100 years. So it is something that is available. You can say that it is a low-hanging fruit among the other projects in the continent, which can be achieved through the 5% AU agenda. That's the reason why I'm ending my response to you by again pleading that all the fund managers yield to the AU appeal 5% gender. Thank you.
Very much, Excellency. Uche, I hope that's addressed your point, and we're certainly looking forward to your remarks.
Thank you. Thank you.
Yes, it has. Thank you very much. And I think good luck with that, Your Excellency. And we all learn from how you get everyone together to get it done. And I hope it gets well executed. And I'm only interested in this also because we are currently in Nigeria. We've been in advanced discussions on a project. It's on the nameplate is about 3,000 megawatts hydro dam project that actually has been on the drawing board for several decades, but we've actually now finally started to get it rolling. Unfortunately, obviously, we are currently going through a situation where the world is going through a recession. So we're looking at that project closely, and I think there's a lot to learn from how you're making the Inca Dam work to make sure that we get the cooperation of our neighboring countries. Within the NSIA, now to my main remarks, I think what we have learned in the current situation and the things we're working on have been evolving. There are probably three lessons that we've learned with the current situations we're in. One is obviously the world is coming to the realization that for quite some time our lifestyles might not be the same, and so things that may seem like short-term or medium-term investments to address the current COVID situation are now turning into medium, perhaps long-term investments. And so being prepared on a sustainable basis to ensure that we are prepared for how the world is evolving is very important to us. And to that extent, the second thing we've also learned is the response that the developed markets have had and the quantum of capital thrown to the markets is very different from how African countries are responding. We recently just saw that Nigeria and a few other countries have applied for loans to survive, to be able to get through this period. But you see the resource gap that exists between the response from Europe, America, and Asia versus the response from Africa. And I think as a consequence, it serves for us to think a bit more creatively about how we invest and how we use our resources better. The third thing is obviously the young people and the infrastructure they need is very different in this new world. And one thing that's been very clear has just been the inadequacy of digital infrastructure. And not just for the young people, for all of us in Africa. And so this is turning out to be an area of interest for us. I think that is becoming an area of interest for us. Now, so the way we've responded to it has been the following. I mean, I think for Nigeria, and I did say on the last call, agriculture, healthcare have now become top of the areas that we are interested in. And there's some transactions that we'll be putting on and sharing with you on the platform, Hubert, in not too distant future. The first thing we've been looking at, and this has been a project that's been on the drawing board, but we're now working hard to accelerate it, is a basic chemicals platform. And we call that the basic chemicals platform because we've started out trying to make ammonia for the production of fertilizers. We're now expanding into other areas. And this we're doing in conjunction with OCP of Morocco. We've actually gone through the first phase of conceptual design and optimization of the project. And we're looking to start to raise capital for that shortly. And this will expand Nigeria's ability to be self-sufficient in things like fertilizers, which is needed for agriculture. And bear in mind, there are two other projects that are in the country. One is about to be commissioned by Dangote, fairly large, 3 million metric tons capacity. Versus ours with about 1 million metric tons. for ammonia only. But then urea and a few other things will be added on later. Indorama is on the expansion of the existing plants, and there are 2 other projects on the drawing board. So there is a lot of focus on things that are going to be helpful for the agriculture sector. The second thing that we're working on is pharmaceuticals. One of the biggest realizations for us is just how you integrate not just our healthcare infrastructure, but our ability to be ready in terms of providing ourselves with basic pharmaceuticals. And there are quite a few companies here in Nigeria, but more is needed. And we've been working with University College London to develop a program that's also now been accelerated. So we're taking this concept of investing in pharma and agriculture very seriously. So 2 of these transactions that have been in the drawing board are now being accelerated. Across the rest of healthcare, we've been investing steadily in certain areas of healthcare, in cancer treatment and diagnostics. We can expand that further. So you're going to see us shifting a lot of our resources into this area. The other thing that is happening also is that in a world where there's a paucity of funds, and there will be a paucity of funds for Africa, quite frankly, and I'm quite keen to hear what Hero has to say about that, because saying he couldn't find somebody to work with was a little bit difficult for me to reconcile, because I believe I'm here on the phone and I'm here and as Solomon Asamoah who have something to say on this. My sense is that there is an opportunity for us to work harder and transition from funds management companies to asset management companies. And here's what I mean by that. One of the challenges of companies like ours is just the inefficient use of certain assets. And so we are now in various discussions with the government to novate those assets into our fund. So at the moment, we're in a long, lengthy discussion on novating 3 major high toll road projects, a 4th one on the way. There are quite a number of other assets that are yet to be announced that we are now in discussions to have novated so that we can either manage a better risk capital for them as a way to drive better efficiency. So this has been a very good opportunity for us, and sad as it may still seem, but it's an opportunity for us to introspect and work very hard at addressing the things that are real basic gaps in the economy. The reality that we're facing up to is we're working as if that this is not the only pandemic. We're working with the reality that this will stay with us for some time, and there'll be many more in the future. So building the infrastructure necessary to address this now and address it in the future is what is in many ways reshaping our investment philosophy. So agriculture, I've said that before, pharmaceuticals, and then taking on existing assets in the country and transitioning a little bit away from just placing capital in allocating capital in both the bond and the equity markets, but driving more the engine of our infrastructure investments. Now, for those who have no background to the NSIA, which is the organization that I lead, 50% of our assets are now committed to infrastructure. And the top 5 areas for us in investments now are healthcare, agriculture, roads, power, and gas industrialization. And there's a lot more of what's happening with gas industrialization. I'll give you one last information before I leave. Nigeria has had this program of flaring gas for some time. And some of the stats I see is that as much as 2 billion standard cubic feet of gas is flared every day. 2 years ago, a policy was put in place to stop that, and that policy has helped. But turning that into productive products is now something that beginning to shape up how we look at gas. So we look at gas as something really investable, and there are so many opportunities to jointly invest here in the country, not just to make basic chemicals like we are producing, but we're turning some of the gas sites into LPG. And I know it may sound counterintuitive, especially for some of our colleagues who are listening from the Scandinavia. We actually believe that this is good for the environment. And that's only because the alternative is flaring this gas. And so we are now talking about turning it to LPG to stop deforestation. One of the things you notice when you come to a place like Nigeria and maybe some other African countries is the rapid pace of deforestation. You ask yourself, why? What's going on? Deforestation in Africa has been largely because people use firewood for cooking. And that, I think, with a large, fast-growing population in parts of sub-Saharan Africa, particularly in Nigeria, it can turn into something quite serious. Meanwhile, gas is being flared. So we think, and one of the projects we're working on, we applied to Click Foundation for carbon credits, and I think it's something that should pass, because it actually does help the environment, and at the same time helping stop deforestation. So some of the things we're working on, these are the areas, but this has been a wonderful moment of introspection, looking inwards, looking at the assets we have and seeing how we can use them more efficiently. And I think, and I've said this before, and I've sounded like a broken record, but for us right now, healthcare, agriculture, very interesting. And quite frankly, for those who look at it as social investment in Nigeria, the sort of returns we're seeing are in the mid-teens to high 20s in terms of IRR for some of the healthcare projects, as well as agriculture is a lot less than that, but healthcare certainly huge demand in a place like Nigeria. I'll stop here, Hubert, and thank you for that.
Thank you very much, Uche. I think you make the point that obviously these assets, they exist, but the reality is, we need to be able to step forward as institutions like NSIA or GIF or as the domestic asset owners to actually, bring these projects, de-risk them, and work on a collaborative basis, I think, to be able to attract, the type of co-investment that we're ultimately looking for and talking about within the 5% agenda. But that's concrete. I mean, there are those transactions there, and we certainly take, and continue to want to work with you on bringing those opportunities onto the co-investment platform. Solomon, I'm going to turn to you now because I also know that you have some very good live projects and perspectives. So the floor is yours.
Thank you, Hubert. Uche, thank you. I also enjoyed listening to you. We share many issues in neighboring countries in West Africa. I'm not going to speak for long. I'm just going to say a few things. I think the platform idea of placing projects is very useful. Other platforms have been up and running for a while, but I think there's something could be tailored more towards our needs as sovereign wealth funds and countrywide investment institutions. I think it's very important when we do that is that we are very specific. I personally will only put projects on there that are ready to raise the financing, or specifically say if this is in the project development stage or this is ready for investment, and the specific types of investments we are looking for, both in terms of equity and in terms of debt. Equity, what are the expected returns? Debt, what are the debt service coverage ratios? And description of the transactions, and it also should be something that has passed our own investment criteria, because my assumption is that we have a similar kind of philosophy amongst this group, in that we want to make an impact, but we also focus on financial returns to be sustainable and profitable, and to attract those types of funding and investments into our transactions. So for Ghana, I can speak quite clearly that there are a number of good transactions that we've done, and there are a number of good opportunities coming up in the next 3 to 6 months, and I'll be happy to put some of them on the platform as an indication. Most people know about our airports investment, which was done a couple of years ago. Although airports isn't obviously the flavor of the month right now with nobody flying, but eventually that will end, I assume. We had a major investment in a ports project, and we required about $150 million of financing. This is the second largest port in Ghana. I actually ended up calling my former employer, Africa Finance Corporation, AFC, out of Nigeria. They came to the party and took the whole amount because I knew the criteria that they look for in investment, and so they came in. There's going to be another phase to that port project where we will require further financing. Again, we'll make it very specific, put it on the platform, and if anybody has the mandate and the appetite for Ghana, I think you'd be quite interested in that. Like Uche said, we're also looking at toll roads, and we have 2 coming down the pipeline. There's been a lot of development work on these toll roads, and they're almost at the stage now where they're ready for financing. But again, I'll wait until they're ready for financing and be very specific, and again, apply that to the platform to see if people have the appetite and the interest. One of the other areas is that given what's happening at the moment with COVID-19, is that many institutions are going to be faced with liquidity challenges. So I think it's particularly important that we, in our respective countries or areas, also be able to provide some liquidity and some insight into which sectors in our particular country are looking quite good, even despite the difficulties. For example, in Ghana right now, gold mining projects are looking extremely interesting because gold price has gone through the roof. And there's a number of those with massive development opportunities also in terms of employment as well. We are for the first time looking at two of them in our market. And again, I'll put this on the platform because they're very interesting for returns and also diversification. So just to finish and say, I think the timing of when we put these projects on the platform is very important, and we should be very specific about what can be done, and we should also be very clear about the expected returns and the expected risks. The final point I want to make is just to agree with Uche on his novation, the actual taking over of unproductive assets in our respective countries. And again, we as a group of investors are specifically well placed to do that. So for example, there's quite a few power assets in Ghana which are underperforming. There are quite a few other types of assets which will be novated across to the Ghana Infrastructure Investment Fund, and we will then be looking to actually make them a lot more productive, and they'll be generating cash flows much earlier than your usual infrastructure investment transactions. Again, those may be interesting to quite a few potential investors on this platform. So that, I think I will stop there, Hubert, with your permission, and if there's any questions, happy to take them.
Thank you. Thank you very much, Solomon. And, you know, your partnership on the platform and the co-investments is, you know, is always welcome. You know, one of the most important things we continue to hear in the continent is the issue is not the capital, but rather the pipeline of bankable or investable projects. And that's why we're keeping it very closed to institutions that understand that this is a financial return-oriented situation, but at the same time, ESG compliant. So we get the double impact. So we're very much looking forward to those projects. One of the things I'm actually working with His Excellency Prime Minister Raila Odinga on is the whole issue that both you and Uche have raised, which is asset recycling. You know, taking some of the underperforming assets that currently sit with governments and see how we, through a combination of capital as well as expertise, can really turn them around as viable propositions. And we're seeing a lot of the development partners, as you know, particularly the DFIs, beginning to warm to the concept of asset refinancing as well. And our contention has always been that a lot of assets that currently sit with the development finance institutions that could be recycled. And then, you know, in the context of pursuing the mandate of additionality, you know, doing things where the private sector wouldn't ordinarily like to do it, could create a very unique opportunity to mobilize longer-term capital, because that particular DFI or development partner could then provide additionality by creating a secondary market for infrastructure in Africa, which doesn't currently exist. So capital will feel more free to participate, just on the understanding that it would anticipate that there is an exit, an easier exit, a more visible and definable exit. And I think that whole conglomerated, collaborative approach is exactly where we are today. So thank you for your comments. And talking about collaboration, I'm going to now turn to Sandeep, who represents, you know, 12 plus Kenyan pension funds that have come together to focus on how they can act as a collective and co-invest in the country in some critical areas. So over to you, Sandeep.
Thank you very much, Hubert. Good afternoon, everybody. And Hubert, once again, thank you for asking me to say a few words at this roundtable. And for me, it's a great honor to have our former Prime Minister and African statesman, His Excellency Raila Odinga, on this call. Mheshimiwa Raila, It's really good to have you, and I hope you'll use your good offices in the country to help push for some of the things we need to get done to make pension funds in Kenya investing in infrastructure a reality. Before I talk about some of the things we'd like to do as KEPFIC, I think it's useful for me to give a little bit of context to KEPFIC and the pensions industry in Kenya. The pensions industry here is still very small by global standards, just over $12 billion, and is a very fragmented industry. More than 80% of our assets are in the traditional asset classes, fixed income equities with very limited diversification. And therefore, there's been a growing interest in alternative asset classes, and particularly infrastructure. Now, this led to the formation of KEPFIC. We started off as 5 funds. We called ourselves the Big Five in Kenya. Now we are 15 with a total asset base of just over $2.5 billion. And we have another 10 large pension funds in Kenya who also expressed an interest in joining us. And this gives us a critical mass. We see KEPFIC as an innovative step, facilitating investments in Kenya's real economy, and also a critical mechanism to enable the pooling of assets to reach critical scale and new investment capabilities. Now, we have a number of bottlenecks in our country. Firstly, the legislation, which currently is restrictive in terms of recognizing infrastructure as an asset class. This is something we're lobbying very hard for, and our understanding is that the laws will be changed to enable this. And secondly, we also have a lack of specialist infrastructure managers here and traditional asset managers who are very hesitant to look at infrastructure as an asset class. But having said that, as KEPFIC funds, we have committed that over the next 3 to 5 years, we will have an allocation of 5% of our assets to infrastructure. So I'm really excited about this Africa 5% initiative. And we're looking to setting up an infrastructure platform model very similar to the pension infrastructure platform in the UK. We are floating a tender for a specialist infrastructure manager with a specific mandate to build capacity for us in Kenya, so that in the next 5 years, we will have the expertise to do these ourselves. We also recognize that we are small, and thus we've made a lot of effort in forging partnerships. So we've talked to US funds, UK funds, and South African funds. We're getting some good traction. We have a partnership with US pension funds, and our aim is to facilitate at least $250 million worth of investments into East and Central Africa in the next 5 years. The priority areas that we're looking at as KEPFIC are firstly core infrastructure to support trade and agriculture. So we're looking at power generation, distribution, transport, including highways. So one of the projects that we looked at is the Kenyan PPP project for the Mau Summit Highway. This is a dual carriageway connecting Nairobi and Nakuru. Unfortunately, the process there is taking very long. We're also looking at social infrastructure with a focus on health and education. We've looked at one of our main referral hospitals in Nairobi, the Kenyatta National Hospital, looking at capacity there. We are looking at student accommodation, student hostels at 2 of our universities and investing in educational facilities. Another big priority area that we've identified is the government's Big Four agenda. Our president is very, very committed to affordable housing as well as supporting local manufacturing. So we're looking at helping and investing in housing units, providing the offtake for affordable housing, and creating rental funds for affordable housing, as well as supporting manufacturing in terms of local material and supplies. We engage our government, Kenya's PPP unit, and I must say that we have an impressive pipeline of opportunities. I love the infrastructure platform you shared, Hubert, and I'll be speaking to our government to include the Kenyan PPP pipeline on that platform. And again, there's been a lot of interest in KEPFIC, and we keep on getting lots of investment proposals to us. So we'd be happy to start looking at how do we share these subject to NDAs that we've agreed to. So, Hubert and team, I'd like to say that KEPFIC, small as we are, we have committed to 5% in infra over the next 3 to 5 years. We'd very much like to be a part of the Africa 5% initiative. I'd like some of your ideas on SME digitization, investing in regional supply chains. We very much want to be a part of this. And in Kenya, in this COVID-19 crisis, we have been at the forefront of engaging with our government and proposing solutions on how the pensions industry here can be mobilized to provide some of the immediate financing to meet the health and economic crisis that we're facing. So Hubert, I'd want to stop there and I'd be happy to answer any questions at the end. Thank you again for having me here.
Thank you, Sandeep, and very glad to have you as a partner. And I particularly like your comments about digital infrastructure and the SMEs. Yesterday, with John from ICC, I chaired an African Continental Free Trade Area Summit with the Secretary General of the World Customs Organization, the Secretary General of the African Continental Free Trade Area, and the Secretary General of Bern Union, with all of the credit risk and political risk insurers, the World Customs Organization, and the Deputy Director General of the World Trade Organization. And there's a real willing and interest now to create almost an asset class out of digital assets to solve some of the challenges. And I think the participation of the likes of yourselves and other colleagues on this call to identify, at which point we can create these investable opportunities that can also have the impact that can help us build the resilience. And investing in digital infrastructure, as Uche Orji mentioned, is going to be critical. Now, obviously, it's not always going to be here for this particular challenge, but unfortunately, we need to be able to mitigate and anticipate others. So very much looking forward to working with you and colleagues, Sandeep. I'm going to move. Is Eamon on the line? I know that he was slightly challenged in terms of timing, but in the absence of a clear yes, I'm going to now move to Nick Thursley, who's the Director General of the World Pensions Council, to give us his remarks.
I don't want to bore you guys. I just want to throw a few ideas that I think are important, and some of them may have heard them before because I keep on repeating the same ideas. But just to make a long story short, I'm delighted to be here today with such a distinguished group of thought leaders and asset owners. As they say in French and Latin, or I think it's a Greek proverb that became Latin and then French. Victory has many fathers, and I'm one of the two or three chaps who invented the expression infrastructure as a new asset class. And so that expression, which has become very banal today, infrastructure as a new asset class, was born 12, 13 years ago, somewhere between Paris, Houston, and New York. And we're a small group of, intellectuals trying to come up with what was already, people were doing it already. So what I want to say is here that some sophisticated Ontarian, Quebecois, Australian pension funds were already investing actually in infrastructure, but they were not using the expression infrastructure as an asset class, which we came up with 2 or 3 other guys 12, 13 years ago. And when we did so, I have to confess that we were faced with a lot of skepticism. So people didn't like the idea, and most experts found it really stupid. And so it took a lot of time for the idea to percolate, even though it existed for a long time, even before the term itself was invented. So I'm making this detour today just to say that good ideas take time. So it takes a lot of time to preach in the desert and to make things happen. And of course, when we're dealing with emerging markets, with all due respect, the way some investors in the Northern Hemisphere view the developing world, or viewed, because perceptions are changing, but risk perceptions are important, because risk perceptions today, if you are the CIO of a large asset management company or pension fund in Edinburgh or Vancouver, they are a reflection to a large extent of the past, right? Because the financial statistical information is based on past and present data, right? And so risk perceptions regarding what was called not long ago, when I started working in finance, we called emerging markets not emerging markets. I was shocked, we called them LDCs, least developed markets or least developed countries. And so even emerging market itself is a reflection of an improved perception. So I'm saying all this because if I have something to say today, only one thing is that's how the world is. So this is how financial analysts, CIOs in the Northern Hemisphere, to a large extent, they view Africa, like it or not. So I think you have to take them as they are, and I think you have to invite them or entice them or encourage them to put more money in real assets in Africa based on their current worldview, right? And so there are many positive things that Africa has going, and one of them is the macroeconomic and demographic dynamism, which I think will make up for the collapse in the price of commodities and oil and gas. But I think that long-term trend about demographic, economic dynamism is there to stay in spite of the so-called corona crisis. And I think it's good for real assets, and it's good for infrastructure and private equity and other non-listed assets. And another detour I would like to make to later. So basically, I was delighted to be contacted by Hubert. I think he was in New York at the NASDAQ 4 or 5 years ago when he came up. He's very modest, but to a large extent, the 5% framework is the brainchild of Hubert Denso. And when he first talked to me about it, I think in New York 4 or 5 years ago, he wanted my input regarding the percentage, right? So I think why 5, not 7, not 3, not 2, and basically I really encourage him to go for 5 for many reasons that have to do with asset allocation, etc. So and I think it's a good figure. So I think it was an embryonic idea 3 or 4 years ago in New York, but I think now it has withstood the passage of time, and I think today when people look at 5% domestic asset owners, infra, Africa, it makes a lot of sense. It was a very ambitious figure 3 or 4 years ago, but I think now it's more real because, of course, the world evolved in the right direction. So what is the right direction? Is asset owners are putting more money in non-listed and real assets. That is the right direction. So that's really something that is good for infrastructure in Africa. So it's great. It's great, really, that African asset owners are leading by example in countries like Ghana and Nigeria and Kenya. I think it's really fantastic because it's really sending a very strong message to the rest of the world. And when we had the discussion with Hubert at New York like 4 or 5 years ago, not many pension funds on the continent were putting so much money, or not that many governments, and not that many policymakers or sovereign funds on the continent were doing it. And I think fast forward today, what has happened is already fabulous and amazing. So it's starting. So it's moving in the right direction. So of course, more of it needs to be done. But I think the fact that we have that, these people, to use a French word, these beachheads or pivots in countries like Ghana, like Kenya, like Nigeria, I think in itself is fabulous. And it's a very solid base. Now, what I would like to say is, now is the crisis, going forward, how can we attract more asset owners from the continent, but also from Asia, Australia, Singapore, North America, Northern Europe? How can we attract them more to co-invest, hopefully, with the African, domestic asset owners? So if I had to throw just a few ideas now, I think it would be very sexy to start working on the concept of a few regional and sectoral platforms or sub-platforms. So I think it would be great if in 6 months or 12 months, that can be the beginning of an offering saying, look, these supranational, these IFIs, supranationals, jointly with some large African development and sovereign and pension actors and the EU Commission and whatever the World Bank, all together, they're working on these West African infra platform or East African infra offering. And also, with the same line of thinking, sectoral. So a Pan-African utility platform or a Pan-African renewable, slicing the infrastructure as in region. So one more thing, and I think it's an issue dear to the heart of Hubert because he has asked me to speak about it earlier. It's the indices, the benchmarks that are forced upon pension funds and sovereign funds are highly biased because these benchmarks produced by an Anglo-American oligopoly of just 2 or 3 companies and that are used by practically all pension investors and insurance companies and sovereign funds the world over, including in Africa. These benchmarks are highly biased in favor of listed assets using market cap as the golden standard. And these benchmarks are biased in favor of Northern European and US listed equities. Of course, that needs to change. And pension funds and insurance companies needs to be more courageous and themselves, and some are doing it already, but they need to do more of it. They need to break the shackles of these prefab indices and benchmarks. It doesn't mean stop investing into, US equity or fresh stocks, but it means adopt your own tailored, modified benchmark that will allow you to invest in what? It's something that is more of a reflection of the real GDP. So if you move away from listed large cap equity into kind of tailor-made DIY benchmark that reflects current real GDP, but also future GDP, if you incorporate the pent-up economic growth, because infrastructure investment needs economic growth and demographic growth. If you incorporate that, the future growth, into today's benchmark, the mere fact of reimagining or reassessing your benchmark will allow you automatically, mechanically, to free up more money for emerging market and African infrastructure. So that's my main message to you guys today.
Thank you, Nick. As ever, you've taken us on a journey and left us with lots to think about. I know that we have our good friend Eloy, on here. Hi, Eloy. You're most welcome. For those who don't know, Eloy is the CEO of PGGM, one of the largest pension funds in Europe, and he spoke to us last week, and he's doing some really great stuff. And I think it'll be very interesting. I'm going to actually move to Duncan to speak, but Eloy, you may have some response to some of Nick's concepts there as to whether that would actually be something that, whether it's a sectoral fund or a sub-regional fund, that could be interesting. But I'll move to Duncan in the interest of time.
Thank you. Can you hear me okay, Hubert?
Yes, we hear you and see you. The floor is yours.
Thank you. I just want to pick up on a couple of points that, firstly, Nick just made, but also Uche made a little bit before when he was talking about his piece. So, and really the point of these is about how do we free what is limited investment capital and to apply it into African investment projects, be they infrastructure or indeed anything else. So, firstly, to emphasise what Uche was saying, admittedly it was in the healthcare area, but the IRR being some 20% for some of those projects. So there is very good returns to be made if we can get past the structural problems. And often those structural problems are around taxation, repatriation of assets, and even when we've discussed as well secondary market for what is otherwise illiquid, potentially infrastructure assets. So there's some of that is actually being addressed. But on a policy level, I think the important thing is, and again, look at what we have in terms of NSIA, how that has developed from, as Uche said, an investment fund, an investment manager, now to an asset manager. So it's making better use of those existing assets. This is going to be increasingly important across the continent as have to apply with very little headroom. They have to see what they can do in terms of raising debt, as I say, with little headroom to help support their economies. We have to chase every investable dollar that we can, and starting with each of the each individual country. And so in a different format are proving to be a very sensible policy development. So, and it's a shame it doesn't look like we've got Ayman on the call, but Egypt is a good example of that. How it's put its state assets together. We know about those, many of those being linked with the armed forces and things like that, and not being managed efficiently. So it's adopting that asset manager approach that Uche says. And that is something that more governments can actually look at a way of better using those assets and freeing capital for deployment elsewhere. So we've also then seen it in what NSIA is doing, where it's acting also as a project manager. And Uche mentioned a hydrocarbon project. There's the second Niger crossing. We see something similar in Senegal as well. And it's also has been called in as well under COVID-19 to provide some project management expertise. So, and we also have seen that in Morocco as well, and we have Ithmar, they were certainly on the line earlier, and have got very good experience in that. So I think my only point that I would make is to emphasize what Nick and others have said, which is about that all of these policy tools have to be used to free capital to invest in the much needed projects across Africa. And governments should start to think about how they can use the COVID-19 crisis as a way of perhaps unblocking some of those structural reforms that have been limiting investment. I mean, South Africa, and Hubert, you are much more expert in South Africa than I am, but here, South Africa is a good example where it is on the macro side, it's got a very good reputation with the Reserve Bank, but on the micro side, in terms of labour reforms, in terms of a whole suite of developments, it's been quite poor in terms of being able to liberate the economy and unleash a more dynamic and entrepreneurial economy. Now, will this crisis be an opportunity to free some of those structural obstacles? And my argument would be, under these circumstances, that governments need to look and rethink their whole approach to how they get in additional investment, both from their own countries and their own resources, but also how they get in additional investment capital from around the world. And as a final point, there's the traditional sovereign wealth funds, those mineral resource funds. They have a record of investing with these new type of sovereign wealth funds. We've seen a hugely successful approach in, for example, in the likes of Russia, but also in some Western European countries and elsewhere, of those capital-rich countries who want to deploy their capital, partnering with other sovereign wealth funds who are more of the inward investment type of sovereign wealth funds, and being prepared to do that. So that's my point overall, looking at the range of policy options that are potentially available for governments across the continent.
Yeah, thank you, Duncan. I think that this is absolutely the point. You know, as a constituency, as an asset owner community, we've only really spent a lot of our efforts in the past responding to policies that we don't like from government. And our contention is that we really need to be much more forward-leaning, quite a bit more transparent with how we operate, and then get more credibility about how to partner to redesign some of the policies that we think not only don't suit us, but won't actually accomplish the objective that a lot of the governments are seeking to pursue. So if, you heard Sandeep in Kenya talking about looking at the pensions infrastructure platform model in the UK, that was born out of the Chancellor at the time making a presumption that every single PFI related infrastructure program that they would put out, the British pension funds would take it up. And then it created a bit of animosity, because every time a transaction or a program was put in front of the pension funds would say it doesn't meet our criteria. And then basically the outcome of that was the British pension fund community had to put their own platform together and then go to government with the criteria around that. Now, I think that's what we actually need more around the world. I think as asset owners, the governments are going to start really pushing issue prescription, not because they think prescription is a good approach to, generally, but because they're becoming frustrated with the perception that we refuse to support some of their programs. And, and the retort has typically always been, well, it doesn't meet our criteria. Our investment policy statement won't allow it. But we rarely communicate what our investment criteria is to the governments, to even help them be able to design a program that has a remote prospect of actually being able to meet that criteria. So one of the things that we negotiated when we were working with the heads of state in the 5% agenda is that we would like to see a policy shift from them, and we will become a little bit more open with information that we're comfortable opening up to the private sector in terms of giving them guidance about the type of investments that we're looking for. We can sit with governments and then have that conversation based on a position of knowledge about what we can do and what we can't do on the one hand, but then also recognize that there's an investment process outside of meeting a criteria that there seems to be a bit of a knowledge deficit on. And I think if we can couple those two, we can certainly begin to shape and create not only the types of policies that we're looking for, but the types of transactions that we can ultimately invest in. And I think that's one of the secrets, that's part of the genius around how the Australians were able to negotiate with governments as a pension fund community to be able to deploy so successfully into infrastructures and investable asset class by adopting a similar approach, and similarly colleagues in Canada. But thank you for your points there, Duncan. And before we sort of close out with our final points on some of the research work that we're going to be looking to do, touching on some of these issues with Dr. Wagacha, I'd just like to call on Eloy if you have any reflections on our thoughts here.
Yes, this infrastructure topic is very much top of mind also for PGGM, as we've been building a direct infrastructure capability over the past 10 years. It's extremely important to have, in our view, to have critical mass. So you can either build critical mass in together with like-minded peers, but you can also build critical mass, for instance, for a more direct investment style, where, for instance, working together with engineering companies. So, for instance, in the Netherlands, we also do we're willing to take some level of greenfield risk in developing projects. But there we have a partnership with engineering companies where we bid on projects, they do the development part, and as soon as the project becomes brownfield, they have the guarantee that we will offtake that project, take it off their balance sheet, and then we will be running the risk of that project once it's brownfield. So I think one of the issues of building a good infrastructure capability is the right type of partnerships, critical mass, and also building the right team. So we invested a lot of resources in actually building an internal team to do these things. While initially, 10 years ago, we started investing in fund of funds. And at that stage, we just saw there was just too much misalignment because we were paying such amount of performance fees and management fees to the intermediaries that we decided to cut out the middlemen and go direct. The only disadvantage of the direct strategy is that it has more or less limited ourselves to doing large deals in Europe and North America. And because you need a local, if you go direct, you also increasingly need a local presence. So now we're discussing of opening a local office, for instance, in Canada, and some point in the future to be closer to the projects. We have people flying up and down to North America constantly. And we also had an experience which actually unfortunately changed our strategy in emerging markets. We were building the largest windmill park in Middle America, in the Gulf of Mexico, in the state of Chiapas in Mexico. Unfortunately, that project, it was a 1.3 billion euro project. We worked together with Mitsubishi and Macquarie in building that windmill park. And we actually wrote down 130 million in equity on that park because although we had all the licenses in place, we already brought the windmills in from Vestas to actually install there. We had local problems. We had riots with the local population that would not allow us to put the windmills in place. So we did not want to have any kind of violence on the ground or police kind of securing the fact that, we could build there. So we actually wrote off that investment, but then trustees turned back to me and said, look, we don't ever want you to do a huge, risky greenfield project in the emerging market anymore because we've never had to write down that kind of money on a project. So that's been very unfortunate for us because that has limited our activity in emerging markets through fund of funds. And with the cost structure being as it is, we've subsequently focused our activities on North America and Europe. So it's a conundrum to a certain extent, and I really do hope that we find new kinds of partnerships in the future, new types of institutions that can help to bring this capital to work globally, because I do think if you have a 5% infrastructure allocation as we do, which will be growing up to 25 billion at some point, we think, growing even from 5 to 10% of our portfolio, then you do need really a global presence, and you cannot limit yourself to North America and Europe. So I think this is a trend which will gain in importance, and I think in Africa you're being very innovative to build the right type of partnerships and structures. You will actually attract this foreign capital. I think.
Thank you, Eli. It's definitely, as you say, it's two-pronged. It's the partnerships, and it's the mindset and the willing to pursue those partnerships internally from an institutional standpoint, or making the changes. One of the things we deal with on the continent, just from an asset owner perspective, is on infrastructure. A large proportion of the pipeline is greenfield. And of course, we want to get straight to the already brownfield cash generative situations. But one of the things that we're actually, applying serious thought to is the whole issue of partnering with civil and consulting engineering companies, construction companies, good quality project developers. Because ultimately the pipeline will never come unless you have that level of expertise driving some of those transactions. So it's interesting that you've taken that particular approach.
So maybe one more comment on that Mexico situation. I'm absolutely convinced that if there would have been a local infrastructure bank, which kind of had a very strong government involvement, that would have been partnering in this greenfield stage, this would have never happened. So we had the Inter-American Development Bank, which was in the transaction with a couple of $100 million in loans. But in the end, I think also the kind of the government didn't have enough, let's say, skin in the game to make this a success. So that there was a huge tension between state government and federal government. And so it did make me think a lot about, if you ever do this in the future, again, you need a different structure. And everybody needs some skin in the game to make it work. You need real alignment of interest.
Yeah, absolutely. And I think that's what we've tried to sort of build into the sort of the 5% agenda co-investment model, which can clearly demonstrate that we have that level of commitment. And interestingly, it is not so much it's symbolic in many respects, and it's important, and it's strategic. But the types of quantums of global capital that can be attracted simply by that capacity to de-risk, by having that sort of local demonstration of both capital as well as proximity to be able to figure out and manage the political risks, I think is a real opportunity for the continent. The added kicker is being able to drive the ESG related agenda as it's linked to real assets. So really good points. And I'm hoping, Dr. Wagacha, in your research, these are some of the elements that we'll be able to factor in. So this is a nice opportunity for me to call on you now as the person that's driving the forum's research project that will ultimately be published, hopefully within the next 4 to 6 weeks, that captures a lot of the discussions that we've had here, but hopefully serves as some form of, policy tool or reference tool for some of the development partners, as well as our own colleagues in the asset owner industry, as well as governments more broadly. So, but I'll let you explain that. Over to you.
Excellent. I would like to say hello to everybody, and thank you a great deal for this interaction. All the discussions are pointing out to the fact, the reality that the post-COVID economy will be different. It will be a different kind of economy for which we need to prepare now, where some of the traditional policy mixes and some of the traditional interactions between, for example, institutional investors and policymakers on the macro side will be different. So the mosaic of that post-COVID economy is closer to what His Excellency pointed out. We are in a situation more or less like a third world war. And what it means is the reconstruction that needs to take place has to be thought out early. It's got to be given very strong leadership, and it has to be done with a great deal of bravery. I'm glad to say that the discussions of the last 3 or 4 roundtables have been highly useful in putting together the document that was circulated by Africa Investor. And some of the ideas have been have fertilized the thinking about what we are heading to in this research project, which is basically to collate ideas, synthesize a very influential roadmap report for what the post-COVID economy will look like and what it might mean for a number of areas. And we selected 6 areas, which I'll just go through briefly. And these areas have, to start with, the interaction between institutional investors and the macroeconomic management policymakers. It's clear that the language, for example, of policy mix between fiscal and monetary policy is no longer enough. It wasn't enough even in 2008. We saw that new tools were brought in, for example, quantitative easing. Now, the post-COVID economy needs major interactions between macro policy and institutional investors. I heard Hubert just and a few other people mention briefly about interacting institutional investors with policymakers. For example, the creation of an infrastructure platform. Maybe what needs to be done, as Hubert is saying, is to ensure that you package what might be called like the minimums for infrastructure platforms, and try to ensure that governments understand and we communicate what governments, the minimums that governments need to do to access other investors into their projects. So one area is this interaction between institutional investors and macroeconomic policymakers. The second area is the supply chains and trade support. And in this case, I think Hubert discussed quite in some detail, perhaps he knows even more than I do, about the importance of driving the Africa Free Trade Area Pact and ensuring that it is put into ICT platforms. You are able to do digital trading and to move the volumes of trade, especially driving important areas like food trade, like small and medium enterprises, and ensuring that that goes on. That area is the major impact that is going to happen with pension funds. This is, as you know, is a demographic kind of divide. Those who have accumulated up to now and then need to decumulate in the years to come might find that the rates of return probably won't be building their returns at the rates that were available, say, 10, 15 years ago. If you happen to be in the accumulation phase, maybe you might lose a job. People have different demographic opportunities. And then we have item 4, which is the change in strategic asset allocations, SAA. The most important opportunity here, and it has been mentioned in a number of interactions, is to build a more resilience and greater sustainability through ESG. ESG comes in to strengthen economies and ensure that we have a sustainable world in the post-COVID economy. The fifth item is capital markets and the beating that they've taken on the African continent, and we need to rethink maybe some of the impacts that are going on, and find whether there are ways in which we can build resilience in capital markets. And finally, we have an idea about the roles in all the 5 areas that we've discussed. The roadmap would give new roles and insights for the role, the sort of interactions with multilateral and bilateral plus private lenders. So you'd have new ideas about how multilateral and bilateral and public and commercial lenders behave towards the post-COVID economy in Africa. And it's quite clear that on the rebound from COVID, it's quite clear that much of the traditional flows to Africa will be limited. So in a sense, what we are discussing about the idea of having infrastructure platforms and areas where sovereign wealth funds and pension funds can find a footing in funding activities in Africa will be critical. So that's as far as we've got with this initiative of the influential roadmap report. And if we get it going, the kind of initiative that we will structure will have a path-breaking document, a path-breaking initiative with a forward, an executive summary, And each section will analyze the largest groundbreaking COVID-19. Each section that I just discussed, each of the 6 areas that I discussed above, will analyze large and groundbreaking impacts in the post-COVID economy. And each section will conclude with a prescribed roadmap and roles and responsibilities for 4 stakeholders. 4 stakeholders. And these stakeholders would be African asset owners, that is sovereign wealth funds and pension funds, which we've discussed extensively today, African governments, African regional banks and development finance institutions, and then the 4th actor would be the international development finance institutions. The roadmap, once done, would be shared with Africa's heads of state and governments, the domestic and global asset owner community, otherwise institutional investors, the private sector, development partners, and development finance organizations. And finally, if this initiative is done and we have the provocative post-COVID concepts in a package, we would have a capacity, perhaps maybe put together by Africa Investor, to follow up implementation and follow-ups and availabilities to governments and regulatory agencies to implement the ideas. To make, not to take too much time, that is the kind of mosaic that we are trying to build, and to see the paths towards reconstruction from what His Excellency mentioned as being virtually a 3rd world war for the African continent. Thank you very much.
Thank you. Very comprehensive. I suppose we're at that point now. Yeah, I think we're at that point now. You said it, world war. People are asking us now, we are going to be the ones that people are going to ask, what did you do during the war? And I think the point here is that I'd like to invite and hope that as many of you that are part of this forum would like to help us be part of that, a reviewing group of that research, so that we can ensure that it reflects some of our ideas and our experience. Because one of the things that's become very clear, our long-term outlook and expertise in investing and planning is going to be critical in the recovery. And I think the more we can share that knowledge, I think the better. And the more that once we have a tool, we can actually not just enjoy it as a coffee table type experience, but rather see how we can work with our own ecosystems to share and build knowledge. I think will be a great service. I just want to recognize Richard Collins, who's just joined us from the Public Investment Fund of Saudi Arabia. You're welcome, Richard. Okay, I see you. You're either mute.
Thank you, Hubert, and I'm sorry I haven't really felt much that I can contribute to this august gathering, but once again, and apologies for joining late, but once again, thank you for the opportunity to participate.
You're welcome, Richard, and I think you're very modest because the ESG component and the climate change agenda are so closely aligned that your contribution last week is really causing us to include that climate agenda, in some of our thinking and our work. As I mentioned, We were recently at a meeting of asset owners in a particular country on the continent, and the focus there was the public sector were encouraging asset owners in this particular market to adopt a more climate-friendly approach to investing based on the Paris Agreement, which was fine, and everyone is committed and interested in learning more and seeing how that can become part of the strategy. But then when the question was asked, what is the government's commitment to the Paris Agreement in terms of its undertakings, which were publicly disclosed, no one seemed to have that information. So there seems to be quite a bit of a knowledge gap, as we look at, how the asset owner community on the continent can actually help our governments achieve those objectives if there's a dearth of knowledge about what the actual commitments are, that actually underpin the target. So I think in that respect, we're certainly going to be wanting to continue to follow President Macron's good work and your good leadership with the One Planet group, who have committed themselves and have done a lot of good thinking, bringing together all of the sovereign funds from around the world to really get a good understanding about how long-term capital can make a meaningful contribution to the climate agenda in the context of the Paris Agreement.
No, that's great to hear, Hubert. And I'd like to suggest, and perhaps we can talk about this, if it might be helpful to this grouping, if perhaps One Planet made a sort of small presentation to them at one of your forums, and I, as a sort of representative of one of the founding members, perhaps another sort of founding member from the Gulf, could actually join in and just sort of perhaps give a little bit of an indication about how the One Planet is working and why we think it is actually such a good initiative. And you're absolutely right that since it was first sort of initiated back in December 2017, it really has multiplied quite well. And we have other sovereign wealth funds coming on board. But there are benefits to all, and the way that it actually sort of encompasses what the Paris Agreement is all about as far as sovereign wealth funds are concerned, and there's also an asset managers group, I think that could be very helpful. But we can talk later about that, perhaps.
Fantastic, and I think in that spirit, I'd like to also come to you again, Eloy, because I think what you're seeing with the work that we're doing on the continent is we are really forming, a real sort of consortium as an industry on a pan-continental level. And I was fortunate enough to work with Ambassador Marc-André Blanchard when he was working with Prime Minister Trudeau ahead of Canada hosting the G7. And the idea there was there's a B20, which is a business leaders group that is essentially a group of industrialists that can feed into the G20 meeting. And the concept that came out of the conversations with Ambassador Marc-André Blanchard was that, with everything being such a long-term challenge, and how can we have almost like an institutional investor group linked into the G7? And what happened, your leadership and a number of others, you created the G7 Institutional Investor Network, which has now manifested itself into, I think, the Investors Leaders Network, ILN. And we've always had good conversations with them. And I think the more we can, bring our networks together that have a global outlook, the better. So we'd love to be able to also work with you and the ILN team, because I think it's the largest pension funds from the G7 countries that are effectively part of that group. Lots of Canadian pension funds, Europe as a group, but maybe you want to tell us about that. I don't know if you...
Yeah, so thank you, Hubert. We did indeed join ILN 2 years ago. And interestingly, the Netherlands is not part of the G7. Yeah. But we do have a ridiculously large pension sector. So for instance, PGGM together with APG run about half of the pension assets of this country, which are, in terms of GDP, are roughly 2 times GDP in terms of the total size of the money that is invested in these pension funds. So I think there was, since we work together with the Canadians as partners anyway, because we meet each other on these larger deals, and in club deals we work together with the Canadians a lot. They asked us if we would want to become member of ILN. So we did so together with APG. And I do think what I really admire the Canadians for their entrepreneurship when it comes to issues such as sustainable infrastructure, and willing to go out there to work together with their government to train experts in the field. They have a special program on sustainable infrastructure run out of Canada, which allows people to get trained there in the field, because I think also it's crucial that you start building your own in-house teams with the government, but also in the large pension funds to collaborate on these issues. And it just requires a different mindset and also a very specific training. And the Canadians are showing great leadership there. I wish we were in the Netherlands, but we're not. We're following, we joined with them, we collaborate with them. And one of the things I do here is also try and lobby our government to become a little bit more proactive in this field. We do have quite a good development bank here for a development bank like the IFC, which is specifically dedicated to emerging markets. It's called FMO, but for instance, the FMO is not really part of this network, and we don't really collaborate a lot with FMO because they're in a different segment. Because as I explained, when we invest in emerging markets, mainly through public markets and not through private markets. So, but I think there's a lot going to change in this field going forward, and organizations like ILN will start making a difference. So I do very much encourage this group to collaborate with groups like ILN, because I think it's precisely the type of network we want to build, a group of like-minded peers that can collaborate with each other in the future. Yeah, building these platforms, you really need like-minded long-term investors that are in there for the long haul. We're not here to try and flip an investment. No, actually, I think within this community, when we invest in infrastructure, we invest actually for eternity, right? It's the alternative. It's a new government bond, you could say. Yeah. And if well structured, it's much better than a government bond, because it's inflation proof. It's sustainable. So there's all these characteristics that we can go after, which make infrastructure a unique asset class for pensions going forward.
Yeah, no, absolutely, and I think that's part of the interesting dimension and dilemma around creating a secondary market, because principally infrastructure is a buy and hold situation.
Exactly. Yes.
But yet we want the psychological comfort of knowing that. The
interesting thing is you do create a second market. You can, if you build a good platform, like in our case, we are a multi-client service provider for pension funds in the Netherlands. So in the case, we have basically launched an infrastructure fund, which does not have a certain fixed maturity, right? So if you invest in our fund, it's limitless in that sense. But we do give out participations to pension funds, and they can actually trade them amongst themselves. So we actually create liquidity in our community for our participants, but we still hold those investments in principle for the long haul. And if you're a young pension fund, interestingly enough, we are a young one because we work mainly for the healthcare sector in the Netherlands. So our average maturity of our liabilities is 30 years. So on net basis, we still have more premiums coming into the fund every year, 2 billion more premiums coming in than we actually pay out. So in addition to the returns we make on our fund, each year our fund grows with about 10 billion in size, which we need to reinvest. So we're on the buyer side for many years to go. Mm-hmm. And I think we're similar to a lot of funds in Africa, which are, you have an even younger population than the healthcare sector in the Netherlands. So you guys have really long maturity buckets. And so as you grow your fund, you'll be in the same situation. You're going to be a net buyer. So as long as you work together with like-minded peers on a platform, you can create liquidity at the backside. And I think another area where you can learn from is also Australia, because in Australia they've also pooled these illiquid investments in joint vehicles, and thus create liquidity among these funds, where the participants are in fact the companies that join these pension funds are actually able to switch from provider, but the investments remain with the central platform.
Yeah.
So there's a lot of models to develop and things to learn here, and it's great to have people doing research in this field, because I think bringing academia to do research on what models work well and towards the future is also very promising.
Fantastic. No, absolutely. And we're certainly on that path, and we're certainly going to keep you very close to us and working with us, and you know, we'd love to get your views on the research projects as well, drawing on some of these examples and experiences. But I'd like to, I'm mindful of time, but is there any burning questions from any of our participants that haven't spoken in any form yet? Would anyone like to ask a question?
Let me provoke a question. I had hoped to provoke that question when His Excellency was there, but in terms of moving the infrastructure agenda, the 5% initiative, wouldn't it be probably a good thing to create an expert group that can provide a roadmap, that can provide methods to de-risk infrastructure projects on the continent, and to create bankable projects, and to make them actionable? Because as Fazli is saying, investors are not the problem. The issue seems to be that they want the comfort of well-studied feasibility and actionable projects, and they want to see the mobilization start at home, so that once you have the comfort of numbers of institutional investors, for example, agreeing on that project in Kinshasa, in the Democratic Republic, or in the projects that the Nigerian projects that were cited in today's discussion. Once we have those activities as bankable activities, as actionable projects, and as well-studied and financeable projects, and once we have some of our institutional investors put in the 5%, or more than 5%, as Hubert is hoping, once they are in place, the issue is that other investors would see would have the comfort, and the risk assessments would allow them, to come in and invest their money. And it's also easy in some cases, once the project is on the road, once you put in the financials, it's possible to issue bonds, issue instruments that allow other investors to come in. Thank you.
Thank you. Thank you. Is there anyone else who would like to ask a question? Okay, then I don't think so. Just to respond to your point, Dr. Wakacha, that's one of the reasons that we believe very much in the network effect, but recognizing that charity starts at home. We have great institutional investment leaders. Many of them are on this call. Others are very well intertwined within our network. But we need to start doing some simple things like sharing the transactions, which is what we're facilitating in some respects, and other institutions like BATSETA and BATSETA's peers across the continent. It's really for us to come together. And as Eli said, we are going to be meeting with the likes of the ILNs, the likes of the One Planet groups, our good friend and long-standing partner, the International Federation of Sovereign Wealth Funds, the World Pensions Council. And I think it's just a little bit more work that we will continue to need to do. But I think what Uche and Solomon and everyone and Anne-Marie and the team and Erskine Provident Pension Fund and many others, I think it's I think we're going in the right track, and we thank each and every one of you for your contribution towards this initiative and forum. Uche, I don't know if you wanted to close out with a few words, if you're still on the line.
Been said that I have personally benefited from it. This has been a very rich session, and I just think we've taken a lot of time to pause and think, and it's now all about implementation, quite frankly. And I want to thank you, Hubert, for putting this together. This has been a rich platform. I want to, turn to what the gentleman, I can't quite get to the name, talked about building in-house teams, collaborating with government. That's actually a very, very, very important point. And it's something that we have started to do. We're starting to add some real practical people who have field experience on road construction and stuff. And I think it's a little bit difficult to do, we've found, but we've also come to realize that's the only way to do it in terms of being able to do some of these local asset management programs that we want to embark on. But there's nothing else for me to add other than to thank everyone, and thanks for a very rich and enriching conversation. Thank you very much.
Thank you, Uche, and we note that Anne-Marie and BATSETA, who we'll be working very closely with her and her team. We've enjoyed our working relationship over the years, and we certainly look to take that forward. As Dr. Wagacha mentioned, the research project we will be pursuing. That will probably start within the next 14 days. And please reach out to me or Dr. Wagacha or both of us if you'd like to be part of a reviewing team that will actually look at the substance and the content of the work. And then we will look to convene another roundtable, and we'll send you invitations. We'll consult with each of you to find out what level of interval would be useful. But it'll be any time between the next 2 to 4 weeks that we should hope to be able to reconvene. We anticipate some various different economies reopening, which will have different implications for each of you. So we don't want to sort of burden you with every single week. But thank you again, and please stay safe. And I think with those words, I formally close this roundtable. Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.